Hello, good morning, good afternoon, and good evening, lovers of financial analysis. Uh, Today's podcast will focus on Airtel Zambia, where we'll do our analysis. Like we have always said, that our financial analysis focuses, we only focus on companies that are listed on the stock exchange, particularly Lusaka Stock Exchange. It is not our space looking at financial statements for companies that are not listed on stock exchange. It is not our space. So, like I said, this analysis is sponsored by Roy Consult Advisory, and they will focus on Airtel, which is listed on our Lusaka Stock Exchange. So we go to the analysis. First thing first, we look at the income statement. We want to check whether the 2020 actual results was better than the previous years, and whether we should actually rate that performance as outstanding. So there are a number of ways in which we are going to look at this. One of my favorite ways is to use CAGR, which is compounded annual growth rate, as a basis to forecast into the future. In this case, is 2020, so that we compare 2020 actuals against the forecast and determine whether 2020 was a better year than we thought, or along the way it got bad. So here we have the total revenues that is around 2 billion, around 2 billion. From 2017 to 2019, there was some decrease of about 1%, annual decrease. Same with the gross profit. The operating profit went at 8% plus. But then when we check on 2020 actual, the actuals for 2020, we find that the actual here, that is here to compare with the prior year, which is the 2019 numbers. On total revenues, gross profit obviously went up. But then we'll also have to compare the actual 2020 against the forecast. Based on the forecast, it shows that 2020 was a good year. We expected that the earnings per share was going to be negative 1.4. Unfortunately, the actual turned out to be negative 3.3. So clearly, it shows that the actual numbers or performance of Airtel was below the forecast. There are some few numbers that look good, like on total revenue and gross profit. For the actual, it was higher than the forecast. Was higher than the forecast. But then you check on operating profit, it was about the same. Going to the finance exchange costs, this is where the problem arose, because the actual exchange costs or losses were much, much higher than what we had forecasted. We had forecasted of about 873 in finance and exchange costs, whereas 2020 it went up to 981. So that was a very big problem, therefore giving us a profit or loss before tax of negative 262. On the other side, we still had a profit of 150. Then bringing the issues of income tax, it does take us to a higher number of negative 3.3 as EPS, earnings per share. So meaning that there was no value that was actually maximized for shareholders. There was value erosion. So going into the future, just to check how the numbers will erode over time, it does show that by 2023, the earnings per share will be about 0.03 negative. This is to assume that all the conditions remain the same that we have used to come up with this analysis. So this is how revenue is going to grow. But this is in kwacha. If you are to convert these numbers to dollars, you will see that instead of having this growth, we'll actually see a very serious revenue erosion. But in kwacha, it looks beautiful. The prospects look very good, but in dollars, the revenue has eroded. This is just on the market capitalization. This is in kwacha, obviously, going down. So if we had to convert these numbers, the market capitalization to dollars, by 2020, would have actually seen or would see a serious reduction in market capitalization. Yes, it is actually going down. You can see 2019 by 90% to 90%, 2020 to 84%. So we expect going forward that this market capitalization will continue getting eroded. What is worse is that the EPS has actually turned into negative. That has a serious impact, obviously, even on the MPS, the market price per share, because these listed companies or the players that are on the players that are on companies that are listed on the stock exchange, they play a game of perceptions. So it is basically a game of perceptions. So we expect that as the EPS goes down, it changes into negative like we have seen in 2020 and forecasted going forward. We expect that the market, the share price will also get affected over time. So see on the PE ratio, the way it is actually reducing. The intrinsic value is at 4.73 against the share price as at 31st December 2020 at 30 kwacha per share. The Ebitda margins, I still like the margins in this particular industry. They're still not that bad. This is just on the valuation. Wanted to value to see how worthy Airtel Zambia is. On Ebitda, we brought in these numbers. On depreciation, we did actually forecast the depreciation going forward. Capital expenditure, we assumed that it's going to be at an average of about 500. So this is what we get. The enterprise value, we get about 3.6 billion kwacha. Remember that the market capitalization as at the 1st December 2020, it was at 3 billion kwacha. So with the discounted terminal year, having all these numbers up there, the discounted terminal year of 1.825 plus the present value forecasted cash flows of 1.787 takes us to the enterprise value of 3.6 billion divided by 103 million shares. The intrinsic share price goes to 34.73 against the market, against the share price of 29, or should I say 30 kwacha per share. We have brought in the sensitivity, ignore the sparing. We have brought in the sensitivity, just looking at how the market value, how the valuation would actually change, or the enterprise value would get affected due to the changes in the working capital, in the weighted average cost of capital. So those are the numbers that you have this side. So on this particular chart, we are actually trying to investigate or analyze or check the relationship between the share price and the Ebitda margins. What is in blue is the share price, what is in gray is the Ebitda margins. It is color coded. So you can see that by 2017, the market price was above 34 kwacha per share, going to about 30 kwacha per share in 2020. It didn't get so affected, knowing too well that the EPS in 2020 was negative, so would have expected the share price to have crashed. But it is clear that the market responded to Ebitda margins rather than the EPS, and you can see how the EPS is reducing at the level at which it is reducing against that of the market price. Interesting. On the PE ratio, we expect the PE ratio for this particular industry to be around, should be 12. The PE ratio industry is about, in 2020 was at 24.7. 24.7 against the PE ratio that turned in 2020 turned into a negative. Obviously, we know the reason. The reason is that the EPS was negative, so there's no way you expect the PE ratio to be in a positive. But what does it tell you? What does this number tell you? It tells you that if you are not careful, if this is sustained in the next few years, you might crash the company. It is very risky if your PE ratio has turned from positive to a negative. Look at the PE ratio in this industry globally, they are at 24.68. Yet we are at negative 8.99. But the whole issue is understood well here on the exchange costs, finance and exchange costs there. This is what the problem is. Okay. So in 2019, in our analysis, if you're a financial analyst or a data analyst, when you find that there's 1 year that gives you unique numbers in your analysis, you actually take it off because that is noise, it is data noise. But check, the price earning ratio was very high in 2019 due to a depressed EPS. So the EPS started going down. So maintaining almost the same levels of the share price. So we expect that the PE ratio goes up, and reasonably so. It is not that you did well, no, there's nothing really. It was like I said, it's just a game of perceptions. If you check, the EPS moved earnings per share from 2.2 to 0.14. Yet the share price was maintained almost at the same level from 35 to 34. So what do you expect? You expect that your PE ratio is actually going to go up, and reasonably so. Not that there was anything that was done well, no. It's just that the market is not responding as expected to the EPS, or the EPS is not sensitive. Should I say the share price is not sensitive to the movements of the EPS? That is what caused that. Then later on, the market stabilized, responded, and you have all those numbers now going to the PE ratio, which is negative down there. Obviously, the negative PE ratio in 2020, it is because of having a negative EPS. It is dangerous in an environment, in the market, having a company whose EPS is negative, because that works badly and it is highly risky. It can put you out of business. You can also decide to divest. So there are a number of things that would come out of this particular performance. So I think the price earnings ratio was very high in 2019 due to a depressed EPS. The market did not fully respond to the 93% fall of EPS because the market price only reduced by 10%, yet the earnings per share reduced by 93%. Interesting. Here you can see the dive, the EPS diving into negative, very anti-ambitious. And the erosion of the EPS is due to the huge FX losses, which we have seen in our financial statements, arising from the depreciation of the kwacha against the major convertibles, and that is what caused this. It is not a very healthy dive. This is my favorite visual. It clearly shows those that are in black is the peer group. At global level, what is the Ebitda multiple, which is the EV divided to the enterprise value divided by Ebitda. It's supposed to be about 6.3. It's basically 6.43. Yet, for Airtel, it's about 2.7 as at 2020. Still okay, but not very okay because it is below the peer group by a distance. So with this, if you say you have the Ebitda multiple and you want to value you want to value the organization. You just multiply that number by your Ebitda. You get the enterprise value. As simple as that. So you look at the Ebitda. So in this case, if I come here, if I'm using the Ebitda multiple, I'll just multiply the Ebitda here by the Ebitda multiple to give me the EV. If you don't want to go the DCF way. This is on debt Ebitda. In 2020, the ratio slightly went up. Yes, however, it is within acceptable limits. It is at 1.4 times, meaning that Airtel would take 1.4 years to pay the long-term debt using the current Ebitda levels. Remember that the Ebitda is basically the operating cash. So it is, the numbers are still not very scary because the Ebitda, the debt Ebitda is below 6 times, so it is okay. Here, just showing the market capitalization. You can see how the value of the company is regressing. But what's more, if you had to actually convert these numbers to dollars, that would be very bad. I almost wanted to do it. I decided I shouldn't. But if you can, just do that and you'll see how the numbers would go down drastically. So here we are trying to show the intrinsic share price that as much as things don't look well for in 2020 for this company that we're analyzing, the intrinsic value is still very high, about 6 kwacha above the market share in the current state. So it is still fine. But is it going to hold? If that performance continues, if we continue getting negative EPS, that should worry us so much, then we expect that the intrinsic share price might also start going down or get affected big time. Finally, this is just basically on the enterprise value, the DCF, just trying to show how we came up with that 3.67 billion kwacha valuation of Airtel Zambia. The first component, 1.8 billion, is coming from the present value of the terminal year. The other one is the present value forecasted cash flows of 1.7. So when you add these two, it takes you to about 3.6 to 3.7 billion kwacha. Thank you so much. Please find time to visit. Just going there, sorry. Find time to visit our website, which is www.royconsultadvisory.com. We plan to do a lot of things. We plan to start putting the industry numbers for companies in the country based on their industries, so that we show that these are the numbers we expect. You expect this EBITDA margin for this industry, you expect this. We want to start putting all the industry numbers. So our plans are quite massive, and we'll always value your support. So try to visit our site. But most importantly, visit my YouTube account. Just go to YouTube, search Fitzpatrick Kapepe, and subscribe. But visit our website and just give us the feedback to this, what we have just done. Give us the feedback on this particular analysis and certain things that you would want to see in the next analysis. You can do that. I'll keep the Excel model for now. Maybe next time I'll just look at 2, 3, 4 minutes analysis on the Airtel Zambia using our Excel model. Thank you so much and have a lovely, lovely, lovely day. Thank you.